Howdy, friends. Corey Moser with your weekly recap for Friday, August 1st. So, this week felt like a bit of a roller coaster with major political moves, some alarming economic data, and a big shift in what the Fed might do next. So, if you paid attention today, the biggest news of the week came from the job market. Earlier in the week, it seemed unlikely the Fed would cut rates in September, but then a stunning jobs report changed everything. The economy added fewer jobs than expected. There were job numbers for the previous 2 months were dramatically lower, showing a massive loss of over 250,000 jobs, and the unemployment rate jumped. The sudden news made the market react immediately, and investors are now certain the Fed will cut rates in September, with the odds changing from 40% of a likelihood that they would cut rates to 90% that they'll cut rates, which that will help the mortgage industry. It's a huge deal as it signals that lower rates are likely on the horizon. Now, other news, the housing market is in a slowdown. Both pending and existing home sales fell, which reached a 10-month low, and home pricing is growing at a slower pace. But inventory is rising, which means that there may be some more affordable options for consumers. For your mortgage rates, they continued their downward trend for the second consecutive week. The average 30-year fixed rate is currently at 6.72%. That slight drop led to a small increase in refinance activity. The takeaway for this week is that housing market is struggling, but the economy's weakness is pushing the Fed towards rate cuts. That gives the mortgage industry some much needed hope for lower rates in the future. We'll talk to you again soon. Thanks and have a great weekend.